is equipment financing? Well, in this video, I'm gonna show you and teach you all you need to know about equipment financing. So first off, why are all my top clients buying equipment heading into a recession, right? That's what you have to ask yourself. And the reason they're doing that is so they gain market share and so they grow their business when everyone else is contracting. So it's a really, really smart strategy that not enough people are utilizing. So first off, what is equipment financing? It's just how you purchase equipment to grow your business. All right, now, one question I always get, and I'm gonna help you guys with is, why use equipment financing? Well, first off, you're using equipment financing to grow your business. You're using it for growth. The more equipment you have, the more services you can provide, and ultimately the more revenue you can bring in. There are certain times where contractors need equipment and they're renting it. Well, if they own that equipment, one, it stays on their balance sheet, makes it more valuable to them, and then two, they don't have to rent it, so they're actually profiting. Their margins are higher. So if you're not paying $500 a day, I'll give you an example. One of my clients was paying $500 a day for this piece of equipment. And today we got it financed and he's gonna be paying, I think, $1,000 a month. He was gonna rent it out 5 days this week. Okay, that would have cost him $2,500. Now he's paying $1,000 a month, and guess what? He owns the equipment. So one, you're using it for growth. All right, just how you purchase that equipment. Two, cash is king. You should never use your disposable cash when you can finance something over 3 to 5 years. All right, three, the biggest benefit, is you're gonna be building your business credit and you're adding comparable debt. So a lot of people make the mistake of not buying smaller pieces of equipment using equipment financing. And here's why that's a mistake. Because if you're not buying the smaller pieces of equipment, and you're using cash, one, you're using your cash, that could be used for marketing or for another job or payroll or something that's gonna help the business grow. Two, when you have and you're using financing to buy the smaller pieces, when you need a much larger piece, you already can show that it's on your business credit and you have comparable debt, so you're gonna get better terms on a larger item that's gonna cost you more money. So think about it like this. If you finance a $20,000 piece of equipment and then a $50,000 piece of equipment, when it comes time for you to get a $100,000 or a $500,000 piece of equipment, you already have the comparable debt, you're gonna get a better rate in term, and ultimately you're gonna save more money. All right, now, one of the things I wanna get into, what are the options when you're looking to purchase equipment? Right, first off, you can lease it. Now, the reason I don't love leasing is because a lot of times in their agreement, it's not as straightforward as you think, meaning they might have an auto renewal. And typically when you're leasing something, you don't own it, it's not on your balance sheet, so it doesn't make your company more valuable, all right? It's a liability. The benefit to leasing, is that the whole entire payment can be written off. So just keep that in mind. There's pros and cons to each program, it just depends on how you want to do it. A lease, basically you're kind of like a long-term rental and then you give it back at the end, or you can try to buy it for whatever price that dealer or vendor wants to sell it to you for, right? Now, when you're financing it, you're actually buying it. Think of when you buy a car, So you're buying the piece of equipment and you're paying it off between 3 and 5 years from the date of purchase. It's a monthly payment and you own a piece of equipment. That means it makes your company more valuable. Now, in terms of writing anything off, you can obviously depreciate that equipment, the value of that equipment, and you can write off the interest, right? So that's a big benefit that people don't, that most people overlook. And then there's a hybrid version, which we do offer, and I do think is a good idea. And all that hybrid version is basically it's structured as a lease, but it has a dollar buyout, a predefined buyout at the end. So let's say you're buying a $100,000 piece of equipment. Speak to your accountant. I don't want to give you that advice because each accountant is going to be specific to your industry and your business. However, if you do a lease with a dollar buyout, one, you're guaranteeing that you know the price of the equipment at the end. Two, you can still write off a lot more. You can write off the payments. And then three, you still own the equipment at the end. So let's talk about this. One, if this helped you, I want you to get the guide. I know it did. So comment guide at the end of this video. 2, what are the requirements, right? So I want to get into the requirements of equipment financing. Typically, okay, if you're a startup, you need 700 credit and home ownership, and then we can work on getting that approved. If you don't have that and you're a startup, you're probably going to have to lease it to start. Now, if you're established, typically to get into the best terms, you want to be in business 2 years, you want to have good business credit, and you want to have great personal credit. 620 or above is doable, okay? 680 is definitely preferred. I have gotten people approved as low as 580 for smaller pieces of equipment, all right? And then what do you need? Like, how do you apply to get this done? Well, typically, what you're gonna do is you're gonna fill out a 1-page application. It's super easy. 6 months of banks, your most recent business tax return, and the invoice for the equipment that you are trying to buy. If it's used, you just need a purchase and sale agreement with the make, model, year, mileage, or hours, okay? Super simple, super easy, and a lot of times you can get it done in 24 hours, meaning you're pre-approved in 24 hours, and then you can own the equipment in a day or 2 after that. Now, what are the next steps? 1, comment guide. 2, if you actually have a piece of equipment that you need and you'd like our help, comment apply, and we will be there to help you, okay? Otherwise, make sure you pick up the guide. It's gonna give you a complete breakdown and really, really help you make sure you get into the best terms possible. I hope you took down notes. Don't forget, make sure you write guide so I can get you the guide absolutely free. It'll have everything we just went over in more depth. And if you need our help, just type I'm ready to get the financing today, or I'm ready, and we will reach out to you and personally help you get the equipment that you need to grow your business as seamlessly and painlessly as possible. And we will make sure that we get you into the best terms you possibly qualify for. Thanks for watching.